Right now, there are government payments sitting inside the system with your name attached to them. Not money you might qualify for in the future, money tied to work you have already done, rules that have already changed, and benefits that were already calculated, benefits that belong to you today. And the system is not designed to tell you that. Most people assume that when they signed up for Social Security or Medicare, they received everything they were entitled to. That assumption is costing millions of Americans real money every single month. There are 5 specific situations we are going to walk through today, and at least one of them likely applies to you or someone in your household right now. The rules around 2 of these changed as recently as 2025. Another one has a balance that expires the moment a calendar period ends, and once it's gone, it does not come back. The Social Security Administration processes tens of millions of claims every year. It does not have the staffing, the time, or in some cases the legal obligation to proactively reach out and explain every option available to every person. That responsibility falls on you, and the only way to exercise it is to know what questions to ask. So let's get into it. The first situation involves spousal benefits, and this one carries the largest dollar gap between what people receive and what they are actually entitled to. Here is how it works. If you are married and your spouse receives a Social Security retirement benefit, you may be eligible to receive up to 50% of their monthly benefit, even if you have your own benefit already. The way the system is designed, SSA does not automatically compare the 2 records and pay you the higher of the 2 options. These are treated as separate claims, processed separately. If you applied for your own Social Security retirement benefit and nothing else, that is likely all you are receiving. The people most commonly affected by this are spouses who had lower lifetime earnings, who worked part-time, or who left the workforce for years to raise children or care for family members. If your spouse receives a monthly benefit of $2,400, the spousal benefit you may be entitled to is $1,200 per month, permanently, every single month going forward. If you have been on your own smaller benefit for years without ever filing for the spousal top-up, you may have also left retroactive payments uncollected. The way to find out is straightforward. Call the Social Security Administration at 1-800-772-1213 and ask specifically whether a spousal benefit election applies to your record. Bring both Social Security numbers. That one call could permanently change your monthly income. The second situation is for widows and widowers, and this is one of the most consistently overlooked financial strategies in the entire Social Security system. When a spouse passes away, the surviving partner becomes eligible to receive up to 100% of the deceased spouse's benefit, provided it is larger than their own. Most people know this at a basic level. What most people do not know is how to use it strategically, and the Social Security Administration will almost never walk you through it unless you ask. Here's what the strategy looks like in practice. A widowed person can begin collecting survivor benefits as early as age 60 at a reduced rate, while doing nothing to touch their own personal retirement benefit. Their own benefit continues to grow. For every year past full retirement age that a person delays their own Social Security, that benefit increases by 8% annually until age 70, when it reaches its maximum possible value. So instead of making the all or nothing choice between survivor benefits and personal retirement benefits, a widow or widower can collect income throughout their 60s on the survivor benefit while their own benefit keeps climbing. Then at 70, they compare the 2 amounts and lock in whichever one is higher for the rest of their life. The household gets income during the years they need it most, and they preserve the option to claim the largest possible lifetime benefit at 70. These 2 tracks are not mutually exclusive. They can run simultaneously. SSA does not explain this combination unless you ask directly. The third situation involves a Medicare surcharge that most people do not realize can be reduced or removed entirely. If your income exceeded $106,000 as a single filer, or $212,000 as a married couple in 2024, Medicare is currently charging you more than the standard Part B premium in 2026. These surcharges, formerly called IRMAA, are income-related monthly adjustment amounts. They range from an additional $1,100 to nearly $7,000 per person annually, and they are deducted from your Social Security check before it ever reaches your bank account. Here is the part that matters. The Social Security Administration calculates these surcharges using your tax return from 2 years prior. Your 2026 IRMAA is based on what you reported earning in 2024. If something significant changed between then and now, if you retired, if you lost a pension, if a spouse passed away, if you had a one-time income event from selling a property that temporarily inflated your income that year, you may be paying a surcharge based on income you no longer earn. The SSA has no automatic way of knowing your situation has changed. You have to tell them. The form used to report a qualifying life-changing event is called SSA 44. You complete it, attach documentation of your current income, and submit it to SSA. A successful appeal can eliminate thousands of dollars in annual surcharges. The form is available at ssa.gov or at any local Social Security office. Most people paying these surcharges have never been told the appeal process exists. The fourth situation involves a major legal change that took effect in 2025 and has already sent billions of dollars in back payments to people who spent careers in public service. If you worked as a teacher, a firefighter, a police officer, a state employee, or in any government job that had its own pension and did not participate in Social Security, this may apply to you directly. For decades, two federal rules called the Windfall Elimination Provision and the Government Pension Offset significantly reduced Social Security benefits for people who also received government pensions. In many cases, survivor benefits were eliminated entirely. The Social Security Fairness Act, signed into law in January 2025, permanently repealed both of those provisions. The repeal was made retroactive to January 2024. The Social Security Administration was required to issue back payments covering the increased benefit amounts going back to that date and to permanently raise the monthly benefits of all affected recipients going forward. According to SSA's own records, the agency completed sending payments to over 3 million affected beneficiaries, distributing more than $17 billion in total. Most of those payments went out in early 2025, but as of 2026, there are still cases being processed, particularly complex situations involving surviving spouses who never applied for benefits in the first place because the GPO would have eliminated their payment entirely. If that describes you, you are now entitled to apply for spousal or survivor Social Security benefits that you may have been told you could not receive. Those benefits are now available, and the retroactive window goes back to January 2024. If you worked in a government pension job and are uncertain whether your record has been updated, call SSA at 1-800-772-1213 and ask specifically about the Social Security Fairness Act and whether your account reflects the corrected benefit amount. The fifth situation is entirely different from the others, and it requires no phone call, no form, and no appeal process. It just requires you to look at something you almost certainly have not checked recently. If you are enrolled in a Medicare Advantage plan, and roughly half of all Medicare recipients are, your plan almost certainly includes what is called an over-the-counter benefit. This is a prepaid allowance loaded onto a card or into a member account on a monthly or quarterly basis that you can use to purchase health-related items without a prescription. Pain relievers, vitamins, cold and allergy medicine, first aid supplies, dental care products, blood pressure monitors. The specific items covered vary by plan, but the coverage is real and the amounts add up to meaningful money. The average over-the-counter benefit across Medicare Advantage plans in 2026 is over $400 per year. Some plans provide $1,200 or more annually. And according to federal data, the majority of these benefits go unspent every single year. Billions of dollars in allocated benefits expire unused. The most common reason is simple. People enrolled in these plans either don't know the benefit exists, or they received the card in the mail at some point, set it aside, and forgot about it. If your benefit resets quarterly, unused balances typically do not carry over. They expire at the end of the period and start fresh. That means money that was already allocated to your account for this quarter disappears the moment the period ends. To find out whether you have an unused balance right now, log into your plan's member portal or call the member services number printed on the back of your Medicare card and ask specifically about your over-the-counter benefit, your current balance, and how to use it before the period closes. Here's the picture these 5 situations paint together. The spousal benefit election that SSA does not file for you and that millions of eligible spouses are missing right now. The survivor benefit and personal retirement combination strategy that allows you to draw income throughout your 60s while your own benefit grows toward its maximum value. The IRMAA surcharge appeal that can eliminate thousands of dollars in annual Medicare deductions if your income has fallen since the year SSA is using to calculate it. The Social Security Fairness Act corrections that are still being finalized for public employees and surviving spouses who may never have applied for benefits they now legally qualify for. And the over-the-counter Medicare Advantage allowance sitting in your account today with a clock ticking on it. None of these come to you. The SSA does not send a reminder. Your Medicare plan does not notify you when your balance is about to expire. There is no automatic trigger that alerts you when a new rule change means you are owed money. The only thing standing between you and these benefits is knowing they exist and taking the one step to access each one. If you have a parent, a sibling, a neighbor, or a friend on Social Security or Medicare who has not heard any of this, share this with them today. The difference between collecting and not collecting is almost always just information. Subscribe and turn on the notification bell. Every year brings new policy changes, new benefit updates, and new deadlines. The people who know about them in time take action. The people who find out late watch the window close. Don't be the second group.